Okay, forget the fact that we are about to look into the future and pop out some good looking figures for Cardano ADA. The Cardano ecosystem may have all it takes to thrive and sweep investors off their feet in 2024, but its success is dependent on so many factors. As much as we try to deny it, investors are stepping into a future where crypto regulations will be emphasized greatly. Will this possibly threaten the results of getting 1000 ADA right now? Financial market regulators around the world hardly know what to make of cryptocurrency, and this isn't some sort of lie either. This asset class doesn't fit neatly into existing categories. Also, we got to keep in mind the collapse of FTX in 2022 made the requirement for smarter regulations painfully obvious. National governments want to assert their regulatory oversight of crypto because controlling currencies is how they manage their economies. And so far, the US has taken a hot and cold approach to regulating crypto. Some in Congress would like to see a comprehensive new framework put in place that would allow for the industry to thrive. Financial market regulators are cracking down on a space that is awash with concerns over money laundering, scams, and cybercrime. So, where do we go from here? In March of 2022, the Biden administration signed an executive order that called on federal regulators to assess the broad risks and benefits offered by cryptocurrencies. It has been observed that instead of regulating cryptocurrencies themselves, the US has attempted to regulate crypto platforms. The government wants to treat cryptocurrencies as traditional securities while also working to restrict their ability to be treated and function within financial markets like traditional securities. Christopher Mitchell, founder and principal of Kela Advisors, said. SEC Chair Gary Gensler said in March that if crypto platforms and lenders aren't regulated as stock exchanges, they can't be used as qualified custodians by investment advisors. However, a lot of the issues come down to whether the crypto is classified as a security or not. This heated debate preceded the recent collapse of FTX and CEO Sam Bankman-Fried being charged by the SEC for defrauding investors of more than $1.8 billion. As crypto investors, we are constantly living with the foresight of a regulated future. On the flip side, there is a hope that this will not deter future expectations, especially in cryptocurrencies like Cardano ADA. Earlier this year, it looked like Cardano might be headed for a major breakout, but unfortunately it is now down nearly 20% from its 2023 peak and is officially in dip territory. Cardano is currently trading at just 37 cents. Definitely sounds pretty petty. Anyways, that's both good and bad news. It's bad news because Cardano is having a very tough time breaking through the $1 price level. Well, it's good news because this dip could represent a cheap buying opportunity for crypto investors. Right now, there is a big reason to vouch for Cardano and buy 1000 ADA. Frankly stated, the fruit of this action is going to be reaped in 2024. Why? That's because the biggest event in crypto is coming. Bitcoin halving events, which occur roughly every 4 years, are among the most anticipated inflection points in the crypto industry. As a result of the dynamics revolving around the supply and demand, Bitcoin has historically gone on impressive runs when the next halving is about a year away. So with the next halving likely to happen sometime in April or May of 2024, we are officially right at the point when Bitcoin's supply increases. According to records, the halving is a pre-programmed event in the Bitcoin network that occurs just about every 4 years, and it is one of the inherent characteristics that make the cryptocurrency so unique. This process halves the number of Bitcoins that are rewarded to miners for solving complex mathematical equations. Since this is the main strategy by which new coins enter circulation, the halving event effectively and transparently cuts the rate at which Bitcoin's supply increases. This next halving will decrease the rewards for miners from 6.25 Bitcoins to 3.125 and lower the rate of supply increase to just 1% until the next halving sometime in 2028. And this all sounds amazing, right? When looking back at past halving cycles, there have been 3 so far, and it becomes crystal clear that the halving plays a significant role in the dynamics around Bitcoin's price. Data shows that the Bitcoin's price not only seems to have been heavily discounted when the next halving is a year away, but that the maximum appreciation is reached when Bitcoin is held for at least a year after the halving. So, what do the figures say? Well, let's go back to Bitcoin's first halving in November 2012, when the mining rewards went from 50 Bitcoins to 25. A year before this halving event, 1 Bitcoin was worth around $2.50, but 2 years later, Bitcoin's price climbed to more than $1,000, an increase of nearly 40,000%. While the first halving might have been the most drastic in terms of a price increase, the second halving was still lucrative for investors. For those who invested a year before the halving of July 2016, when the price was $285 and held on for about a year until it hit a high of more than $2,800, they would have realized a profit of more than 600%. 2016 came and it was a similar trend. Roughly an equivalent return would have been made in the most recent halving of May of 2020. Investors who purchased Bitcoin when it was worth about $7,100 would have been ecstatic to see Bitcoin's price reach more than $60,000 by May of 2021, representing another return of more than 600%. The good news is that trends seen in the last halving cycle seem to be emerging yet again, and most importantly, trends related to demand. But the co-founder of Huobi, one of the world's largest crypto exchanges, Du Jun, claimed that Bitcoin may not see a bull market until late 2024 or the beginning of 2025, if past price cycles are any indication. It is really hard to predict exactly because there are so many other factors which can affect the market as well, such as geopolitical issues including war or recent COVID also affect the market. Following this cycle, it won't be until 2024 to the beginning of 2025 that we can welcome the next bull market for Bitcoin, he added. Nonetheless, the spicy point is that Bitcoin halving events always leave a trail of positive results on the crypto market, influencing other cryptocurrencies which are trudging on a ragged pace. So a slew of opportunities await cryptocurrencies, particularly Cardano ADA, in anticipation of the Bitcoin halving. Plus, Cardano looks set already. Cardano has always had one of the most dedicated roadmaps for the development of any major blockchain projects and is showing no signs of letting up now. In September of 2022, Cardano completed a major update, and this year, Cardano is moving ahead with its new Voltaire phase of the blockchain development. This new phase will focus on the governance of the Cardano blockchain, making it more efficient when it comes to activities such as staking and validation. However, the real blockchain improvement that is captivating the crypto community is Cardano's recent Hydra launch. Hydra is a layer 2 scaling solution that is designed to make Cardano run faster, better, and more efficiently. Plus, this has an immediate appeal to users and developers. Of course, scaling solutions might sound rather mundane and boring to the casual investor, but here is the number you need to know: 1 million. As in 1 million transactions per second. Cardano developers are now confident that they can get the blockchain to 1 million transactions per second with Hydra. This mythical goal is related to what Ethereum has long promised but never delivered. So this will be a huge win for Cardano. Furthermore, crypto whales are buying Cardano hand over fist. Due to the transparency of blockchain technology, it is possible to track which blockchain wallets are actively buying or selling Cardano. And right now, it looks like whales are turning positive on Cardano. Whale activity in of itself can be a very useful leading indicator. So with all these pretty talks, is Cardano a buy? Well, yes, it is. Now, we do acknowledge that Cardano seems to disappoint investors regularly, and this could be the case yet again. The pace of blockchain development of Cardano can seem painfully slow for crypto investors clamoring for overnight 100x returns, and investors have continually complained for years that the Cardano blockchain is a quote-unquote ghost chain, where nothing happens. But these concerns are no longer valid as they once were. As noted in reports, Cardano is finally making a big move into DeFi, which is one of the most important sectors of the blockchain world. Cardano is continually upgrading and improving its blockchain. With the new Hydra update, users and developers should be able to see instant results, much faster transaction processing speed, and lower fees. But we say buy the dip, a 1,000 ADA investment is worth it. The Bitcoin halving is near, and as long as you can take the long-term perspective and don't expect a rocket ship to the moon within hours, days, or weeks, you are in safe hands. But that's going to do it for today's video. Make sure you subscribe to the channel, hit the notification buttons, and we'll see you in the next video.